For your money, 2 days of sharp drops for stock prices have given way to a roller coaster ride of uncertainty for investors.
Whether you have a conventional portfolio or your money is in a retirement account, you need to know the right thing to do or not to do with those investments. Steve Elwell with Level Financial in East Amherst joins us here now. Steve, you were here last week Thursday on at 5:30. You had some good advice. What has kind of changed, if anything, from that advice? And go ahead and give that advice as well.
The advice remains the same. Stick with it for the long term. Don't panic. That's not an investment strategy. Selling low is not a great investment strategy, but the markets were rough on Friday, kind of bumpy today. So investors are clearly nervous, but if you can take a longer picture view, or if you're still decades away from retirement, continue saving, good strategy.
Okay, how about for those who are not decades away from retirement and maybe a little bit more conservative, what are you saying to them?
Well, so fortunately, if you're a little more conservative in terms of how you're investing or your approach to how close you are to a retirement, you should have already had some money in safer things like fixed income or bonds or CDs. Those things have been doing just fine and earning nice interest rates. So that's always a part of a good plan when you're building your portfolio if you're close to retirement. Having some money in safer things, diversifying, so the portion of your portfolio that is in stocks, you don't have to worry about when markets go haywire. You can let that sit and recover.
So we're looking at a few things right now. We know that the president is in talks with some countries to maybe even out these tariffs. We know Wednesday, those reciprocal tariffs, you know, the big board that the president was holding up, those all go into effect. You, as an investor, what are you telling your folks about these certain things happening in the news?
So these things are going to create new information, right? We will find out exactly what happens. Do some of these countries negotiate away some of these tariffs or reduce tariffs? What ends up happening if that's the case? And if some of that happens, you would expect there to be a bit of a rebound in the markets for certain areas. So I think understanding that volatility might stick around for a while and preparing yourself mentally and emotionally for what that means. But also sticking with it, because often the big down days and the big up days are lumped together when markets are volatile. So sticking with it is very important.
One of the questions that we have been hearing of, college savings accounts, you know, those 529 plans. What about those? Should families be looking to withdraw that money sooner rather than later, or keep it invested?
I think that's a great question. So those who have kids that might be under the age of like 15 probably should stick with their plan because they still have time before the kids will go to school and actually spend the money. If your kids were older than 15, then you probably should have been a little more conservative, knowing that we're about to start spending that money. So you might want to take a moment to review exactly how you're invested if that's the case. But just another scenario where proper planning would have prepared for whatever the markets give us as it approaches to actually spending the money.
Talk about, you just mentioned it briefly before Jeff's question, how historically some big dips have actually led to big climbs. Tell us about that.
Yeah, so like back in COVID was a good example. Yeah. March 2020, the market lost 20+%, the fastest ever. But also had some huge up days during that same time frame. There was so much new information that was happening at light speed that often when there's a big event happening and the market doesn't really understand yet what might come of it, that there's a lot of extra volatility on both sides, downside and upside. So that's the problem if you try and sell during a period where stocks go down big. Let's imagine tomorrow that one tweet comes out and all the tariffs are gone. What do we think would happen? A huge rally would be my presumption. I'm not predicting that to happen, but if it did, you wouldn't want to miss that.
Yeah.
And that's probably a general recommendation that you have not only for your clients, you know, people who contact you, but just the general public to talk to their financial advisor about what's best for them during these uncertain times.
I think that's where, like any smart investment strategy comes into play, is actually having a plan. There are so many people that sort of just throw money at things and say, well, let's see what happens, but really giving some thought to what am I trying to accomplish? How do I protect myself in all scenarios, good markets, bad markets? Just having a plan is literally half the battle.
All right, Steve Elwell, thank you so much for joining us. Hopefully, we're not seeing you later in the week. Hopefully, things level out. But I know you're generally very nice and coming in here and free for us if we need you. We appreciate it.
I appreciate the invite.